Hello, it's Eric here, and then I am at a completely new beach, and then I don't think I have been here before. But this beach is really, really nice and it's very quiet and very secluded. It's a wonderful place if you want to, clear your head and things like that. Yeah. I may not have been here before, but actually I may have been here before only once. Yeah. But that was when I was a little kid. Yeah. So that doesn't count. And yeah, so today we're going to talk about another dirty financial trick. And it's not so much a dirty financial trick, but a kind of a harsh reality that everybody faces. Yeah, even the investment bankers have to face this kind of a harsh reality. Yeah, and then so what I'm talking about is when a company wants to go private. Yeah. So, for example, we have a public company, publicly listed company that is listed in the stock exchange, and it wants to go private. Yeah, and you may ask why. Well, sometimes the company doesn't want to follow the strict rules laid down by the stock exchange. Yeah, like for example, you have to release your financial statistics very, very regularly, and some companies they don't want to spend too much manpower to do to follow the strict rules laid down by the stock exchange. Yeah, so they want to go private. And the way they can go private is, they have to buy back the stock, from the public stockholders, yeah. And so therefore, you need money to buy back these stocks, held by the public stockholders. And the way to get money is, you can issue debt, yeah. And so that means you borrow money from somebody, yeah, and that somebody is typically an investment bank, yeah, investment bank like Goldman Sachs or something like that, yeah. And then so you borrow money, the company will borrow money from the investment bank. In other words, the investment bank is going to underwrite the debt, issued to the company for the buyback purpose, for the company to go private, yeah. And so therefore, the investment bank is going to issue these debts, and then so what happens is as soon as the debt is issued by the company, by the investment bank will immediately sell these private debts to private investors, and then Matt Levine from Bloomberg, he has a very succinct way to put it, yeah. He says that investment bank basically is in the moving business, and investment bank is not in the business of a storage business. Yeah, and in other words, what he's trying to say is that as soon as investment banks issue some debt, yeah, then the debt will be passed on to private investors. Yeah, so that means that they are not going to store the debt on their balance sheet. Yeah, they want to move the debt immediately to the private investors. Yeah. And so the way to put it, the way that Matt Levine puts it is, the investment bank is in the moving business, but not in the storage business. Yeah, he's referring to the private debt issue to make a company go private. And so the problem is, yes, the investment bank wants to issue these debt and sell the debt to the private investors, but whether the private investors want to buy these debt is subject to market sentiment. If the market sentiment is not good, then the investment bank may have to sell these debt at a discount, yeah, at a very steep discount. Yeah. Premium is when the market is very, very favorable, then you can sell the debt at a higher price and you earn a premium. Yeah, I'm talking about the investment bank can earn a premium. Yeah, but very often, after the debt is issued and then the market goes down, and then nobody wants to buy these private debts, so therefore the investment bank has to take a kind of a haircut. Yeah, so they have to issue these private debt at a discount. Yeah. And then, so a perfect example right now is Twitter. Yeah, as you know, Twitter is going to go private. Yeah, and you may ask why? Well, because Elon Musk wants it that way. And so therefore, Elon Musk has lined up some investment bankers, to borrow some money to buy back buy back all the stocks held by the Twitter public stockholders. Yeah, so that he can take Twitter private. Yeah. And then the trouble is, yes, the investment bankers have promised to issue debt to Elon Musk, to make Twitter go private. But trouble is, right now the market is not very favorable to tech companies. Yeah. So therefore, probably, these investment banks, like for example Goldman Sachs, they may have to sell these private debt to private investors at a very steep discount, like for example, 80 cents or even 70 cents in a dollar. Yeah. And then yeah, so that's it's not easy to issue private debt. You are subject to the sentiment of the stock market. At any given moment. But there are ways. There are 30 ways, 30 tricks that the investment bank can offload these debts to private investors. Yeah, and maybe in the next video we'll talk about some dirty tricks used by the investment banks to offload these private debts. Yeah. All right. I'll see you then. Bye.